What's happening all Tuesday, the 19th of February? Today, housing starts were the main thing that was on the news that kind of talked about what's going on. It looks like the housing starts, the permits are up, but the starts are down. So with what we've got as far as people building, got to be supply is a main issue, I'd imagine still. The big thing that was contributing to housing starts, and actually just the housing in general, was the multifamily. It's not penciling the way it used to be, right? The goal that everybody has to, hey, I want to get into real estate investing and I want to own, big apartment complexes. It's not as attractive as it once was. The numbers are not matching up. And so now, since that is kind of slowing things down, it's having an impact on our reports. There's still a lot of houses being built. There's still things coming through. There's still permits being created, but it's not going to meet the demand. Go ahead and take a look at some of the data that's out there that's been put out. Briefing.com is a place that I like to go, and it likes to get into the details of where that's all. The National Association of Home Builders. You get a few other different sources that they're going to pull from, but that will tell you exactly what that looks like. The other thing that I thought was really interesting is that CoreLogic had come out with information this last week. I believe it was on the 15th, where they indicated that home prices, as I talked about for Black Knight and others, the Case-Shiller Index, others, that CoreLogic indicated that home prices rose 0.4% in July and now up 2.5% from the previous July. So that means as you continue to compound these increases, they're expected another increase of 0.4 in August from when the reports come out, and then they're going to, once all this stuff starts to compile, the guess is going to be somewhere right around 9% appreciation 2023. I was talking about what Black Knight said. They were talking a little bit more of like they said 8.9, so it's right at 9%. So why would I talk about these two things? Well, these are the same reasons I've been talking about buying housing, period. Get investing in housing. I'm actually out in my Missouri office right now. I'm going to other parts of this area. I've got another member of my family moving out here in the near future. So, we have our family trust that we have constructed that has the base of its wealth, I guess, if you will, or its foundation is the infinite banking strategy, which is life insurance policies. If you are not using this, we should talk. You need to contact me so I can explain how I had constructed this. And then we've taken, it started with $90,000 that I've deployed over 1.1 million since I put that in 2016. Now, what we're out here is we moved one property that's giving me zero cash flow. I was getting nothing from it. I still have a couple more that are getting nothing out of it. They're just lots. That's all it was. They literally nearly doubled in value. So I'm selling that using a 1031, picking up a place out where I'm at now, a little ways away from here, about an hour away, where that member of my family will be. And then they will lease it back from the trust. So the trust that we have constructed, I've built it in a way where we'll have family assets that the family can use, continue to develop wealth over the near future. They've got to pay the family for the usage of it, and it's got to be a profitable thing for the family. Otherwise, why do it? But it also provides housing to them that they would pay a lot more for in the market. So you see where I'm going here? It benefits the family. They create wealth for the family, but also create stability for themselves and not be subject to the market that's out there. If you look at what's going on in the market, we've talked about it. I've addressed it. Do your own research. It's been claimed that the big hedge funds, BlackRock, State Street, Vanguard, look to own 60+% of the single family housing by 2030. That's not far away, guys. We're 7 years away before that happens. If that's possible, let's just say it's possible. Where are we going to be as an economy at that point? We know that it's been speculated there. Well, it's not even speculated. We know they've been very, very open that we're trying to be turned to a subscription-based economy. If that is the case, and you're paying a subscription for every single thing in your life, you're pretty much at somebody else's beck and call. You're enslaved, more or less. You do all the work so you can be enslaved to do whatever it is you need to do. Now, we're there anyway when it comes to the tax situation. We're overwhelmed with taxes. How many times does the dollar have to change hands before it's completely taxed into oblivion? 4, 5 times? Think about that. But having control of a single family asset, my opinion, will be the most valuable real estate to own in the future because of the target it has on it. So why I talk about all this, what's going on with the indexes, what's going on with with the housing starts, with the permits, is because you should be getting involved in acquisition of single family housing, period. You shouldn't allow waiting for the market to turn as a way of deterring you from doing that. Find markets that make sense. Someplace you can keep it reasonably rented the entire time you own it. You can raise rents on it. Someplace where things are going to appreciate, say 2.5%. We're seeing potential 8+ to 9% appreciation coming, and it could get higher. You know that if you've got an organization like I'm describing, these three behemoths, they're aiming to control 60% of all the single family housing within the next 7 to 8 years. What do you think they're going to do to the value of those houses? You're either getting in or you're getting out. Now, how are we going to stop that? How is it possible to stop them from doing that? By buying the damn houses. Do your research, figure out which ones make sense, and buy the damn houses, period. I know the interest rates are high, but they're not high comparative to where it's been in the past. It's just not. We got conditioned. Think about that. We got conditioned for the last 10, 12 years. A whole home buying generation has been taught what interest rates should be, right? And now being back to where it was prior to them, even they weren't even born at the time all this was put in place. And now they're, oh, these interest rates are so damn high. No, they're not. Historically speaking, they're awesome still. But they've been conditioned not to buy because of it. And now believing that that the price of housing is going to go down when because the rates went up. The rates didn't go up in a way to influence the price of housing like it used to in past cycles. Because of that, now nobody's buying, making huge opportunity for the powers that be to take it over. That's just my opinion. I may not be right. I don't think I'm wrong. I pray I'm wrong, but I don't think I'm wrong. So you better get in the damn game. If you're wondering how to do that, how to just get moving, simple. Go to my website, aaron.chapman.com. Go to the events, click on the events, click on the Memphis event and come. You don't have to buy in Memphis, but you're going to learn a lot from a lot of good people, especially starting off that foundation I talked about for your family trust. Come, we'll talk to you about that in great detail. So let's take a look at the markets, see what's happening in the mortgage-backed securities. I've got to pull that up because I've been all over the place in different screens. I don't know how many damn screens up, just looking at the market today and seeing what's happening. But I really, really pray that you come and learn something, and then, of course, build a relationship with the people that are there, so that way they can help guide you become more successful in what's coming. Because it's not going to be good, I don't believe, if we don't get out there, start slugging it out, and participate in the market today. So as we can see, we're continuing in this downward channel. Continuing. Now look at this. This is what they call a stochastics. When you get up above this area here, these areas are shaded where in normal trading would be. You get above that, then it's an oversold position here. You get, an overbought position here. That would mean that it would sell off. So overbought, meaning it pushing above too high. This was an overbought position for as fast as they pushed it up. They pushed the value too high, and my channel may be actually a little bit off, and maybe even down in here. But then you've got coming down into an oversold position. Once we break down in here and get that oversold position, you see this stochastic crossover, one crossing over the other, the red crossing over the blue. That means we're going to start seeing it buying back into it. So right now, we are following the bottom of this downward channel. Now, my channel could be a little bit off as far as the exact width of it, that kind of stuff, but it looks like it's still fitting pretty well. We're heading down. We're going to continue to keep climbing in interest rate. I pray that there's a point where it stops and goes sideways and just stays sideways for a bit, or stay sideways, period. And we start to see things level out and just get used to a particular rate. But I don't know when that's going to happen or if it's going to happen. What I will encourage you to do is take it now, because it's still going down, meaning the rates are still going up. You're going to save yourself some future expense if you jump into it now. At least be looking now. Get a pre-qualification done. Go to my website, click on the Apply Now button. If you already have a very, very current application in there, reach out to us. Have us update the pre-qual so you can be on the hunt. So when you find the deal you like, pull the trigger. Let's move into it. Come to Memphis. It's $250. That's it. Plus a plane ticket and a hotel room. Of course, it's all there. It's all a write-off because you're doing business. It should be. Talk to your CPA. I'm not a CPA. And guys, learn how to be successful in this environment. Build the relationships. All about relationships. If you don't have them, you're not going to get anything done. You need to have people on your team that help you get there. All these guys there will do that. Appreciate you. I will talk to you guys on Friday.